is a change. Joining us now is market watcher George See. So this takes some of the pressure off of Elon Musk, doesn't it, George?
Absolutely.
It does in the short term. I think one of the things that we have in common with the tech bubble in the late 90s is that concept stocks are super popular again, whether it's Uber or Lyft or Tesla. And I'm glad for the company and for its employees and people who buy their cars that it's had a little bit of an uplift this quarter, but they still have a long way to go. They lost about $1 billion last year.
Well, but what else do they have to do? I mean, the delivery issue was the key issue, was it not?
I think the issue is actually making positive cash flow so they can actually justify their market cap and valuation. And I would side with Jim Chanos, who's been negative and short on this stock for a long time. I think it's a real speculative bet, and I think that anybody investing in it is I admire their risk-taking appetite.
All right, just to push back one more time, though, won't the delivery, the ability to meet their estimates for deliveries, won't that help them to get another loan if they need it?
In the short term, sure, it helps them a lot, and the stock's going to rally dramatically this morning, and that's good for Tesla, and it's good for the country, and I hope they have more success going forward. But we'll see.
All right. I got to ask you about jobs because we just had the ADP figure come out. It was a disappointment, 38,000 less than expected on new jobs created. Friday, we get the big number. What are you expecting?
I think the economy has softened. I think there's a lot of fear in the air over the tariff war with China and all the saber rattling we're doing around the world with various countries, and companies are telegraphing pretty transparently that they're going to have a soft earnings quarter for Q2. So I think the economy's slowing and job growth is slowing, and we've had a record economic recovery and stock market boom, and I think it's natural for us to have a little softness right now. I'm not too concerned about it, but I think the markets will be in Q3. I think Q3 is going to be a pretty tough quarter for the markets.
George, I think we're getting another telegraph, and that's from the price of gold. That's spiking again. It's well over $1,400 now. $1,419.50 right now, gold is. I think it's spiking because of Christine Lagarde. She's the presumed next head of the Central Bank of Europe. Do you think because she is such a big fan of negative interest rates, she might go ad infinitum with negative interest rates, according to what she's written before? That's what's making gold spike and giving investors a little bit of concern there.
If I was in charge of economic policy and monetary policy for an economic zone that's had about 1% growth for the past 10 years, I'd be crowing about how great negative interest rates are as well. I think she's got a rough hand to play. I looked at gold this morning. In the last 8 years, gold's down about 15%, and the stock market's up about 140%. So,
but George, the reason why Europe is going slow is not because interest rates are not low enough or not negative enough. It's because of the fact that they keep raising the taxes, they keep raising the regulations, they keep fining people, finding new means of finding business people. I mean, that's why Europe is slow, no?
And demographically, they've got incredible challenges. They're going to lose population, and they've got massive immigration issues, and negative interest rates are a sign of weakness on the part of Europe. And I'd hate to be Europe and competing with us and the Asian countries. They're really in a rough spot, no question.
George See., good to see you, my friend. Happy July 4th. Thank you very much.
You too, David. Thank you.
Well, a federal judge is getting ready to cut the damage award in a round